Hello traders, good weekend. Vladimir here. This is the weekly forecast for the week 21 of February 2016. Today is 20th of February and we are getting ready for another interesting week. Well, last week was more quiet than the weeks before as we got used to great volatility. On some pairs we've had more, some we had a bit less. But the main thing is we are still in the moves, and as I said at the beginning of the year, we are into great volatility probably this year, and it's just the beginning. So what happened lately? There are rumors about there are talks about Britain to remain in the Eurozone. It started with rumors, then getting more and more official. Cameron said that he is going to do all he can that Britain will stay inside the Eurozone. The biggest question, from my point of view, is does it really good to be part of the Eurozone this period, this day? So that's of course only time will tell us, and we will see on the future if this move that Cameron is planning to do now to keep Britain inside Eurozone will actually pay well on future. Anyway, let's go back to the chart and see what do we have. In terms of pound, we did see the boost, okay, after real fighting on the last days here. We did suddenly get this kind of push up according to the fact that pound might stay inside the Eurozone. And if we take a look on the last week forecast, then we can see that that was actually our plan. And if we take a look on the chart, you see, that's what we wanted to happen. Actually, to go below this place and we to start looking for longs right here, right? Completing that. So are we into this kind of rally? From my point of view, yes. And as long as we do hold above this support, for me it's longs. On the 1 hour chart, we can see that the pair is trying to gain momentum right here. And you can see that it is trying, it's not there yet, but it's trying to create some kind of convergence. And if we do complete it, okay, like if we keep this kind of momentum here, we are very likely going to get some kind of pullback back to this inner zone, which looks like a bank zone with these inner candles. We have a triple bottoms here, as you can see, three spikes, trend line. So once we get inside closer, we could try the longs, aiming the targets we've been talking about the last week, and that should be to this top or even new highs. So for me, as long as pound holds above this place, we are long. Only if we break down, then it might be the beginning of continuations down to below 140, maybe 138, and maybe, for just a reminder for the long run view, we still have a chance to get this drop down to 133. Okay, I know it doesn't sound right logical right now, therefore for me it's yet bullish, especially with the weak dollar period, and that's why I would remain bullish here for this week while this bottom holds, of course. Next one is going to be the euro pound, which still remain under bearish pressure from my point of view. This kind of a range we've had here seems like coming to the end, especially with this kind of triangle. I want to see that getting breakdown below here, pulling back a bit, and then continue lower. Basically now it's getting easier technically because we do have kind of a new trend line developing here. So while it holds, this kind of move sounds like a great plan from my point of view. So basically kind of pullbacks to improve the risk versus the reward, and then we can talk about great continuation down. I want to remind you where it all comes from, okay? We have a triple cycle from daily. It makes sense that we have something like that before the pair will continue higher. And if we take a look on the weekly chart, we did have this convergence. So basically pull back down to here would be amazing fit to this rally. And therefore, stay on the bearish side is a great plan. So we continue lower, pull back, protect the trendline last highs, improve the risk, the reward versus the risk, get like great ratios like 1 to 3, 1 to 4, and stay in the sell. Okay, that's basically the entire idea here. Next one is the euro dollar, which we've been talking about last week as well. Let's see the chart. By the way, this is the euro pound, okay, from last week. Okay, you remember this one? That was our plan, right? Drop, break here, to push up and look for sells, right? So far, what is the euro pound we've been talking about? So far, the pair follows exactly what we wanted, right? Break here, 2 waves push up and continuation, right? So far, that and that looks the same. Now the euro dollar, here is the plan we've been talking about. We are going down to here, okay? That's around 110, okay, approximately. Now, if we take a look, where is it here? One of the plans we were, so get a small rally and then continuation down. The alternative was we go down to here, okay, this place, then pulling back and continue. That's basically what's going around right now with the euro dollar. Okay, that's pretty much what we've had. Okay, we got this kind of pullback we wanted, broke here, and now question if we can get it and then look for sells. And from my point of view, this is exactly the plan. Now, why? Because first of all, we have a bullish divergence. Okay, sounds great, sounds correct, looks good, behaves good. Now, another important thing is euro is yet under bearish pressure with all the things going around the eurozone. So if we can get 2 waves up and yet remain, if you take a look here, we have kind of a inner zone here. So if we can remain, I would say, below 113, getting 2 waves or triple waves, something like that, to here, this place, and get a bearish divergence, I would definitely be looking to try this kind of sell. One more push down. Okay, but if we keep it straight rally, which might happen, especially with the pound joining in, euro dollar is going to change the game and rally toward triple cycle. That was cycle number 1, that might turn to be 2, and that might be the 3. If this scenario comes in, we are going to 117, 118 ish before we are crashing down for one more bottom. Now if we take a look on the higher time frame, like the weekly and the monthly, we are still moving inside a range cycle. So basically, if we do get this, it's more than great to complete one more false break, okay, and then get one more bottom. And the question, why do I think there will be one more bottom? The answer is very simple, because according to the weekly chart, we still didn't have any divergence. And you know my view that cycles don't end without divergences, right? So basically, I would be expecting something like that for the euro, and then maybe all the way to the top again. Of course, that could take like 5-6 years, right? Or maybe even more, but that's basically the plan. So that's about the euro dollar, pound dollar, euro pound. That's the triple favorite pairs. Now let's take a look on dollar Canadian, which from my point of view remains yet bearish. For me, every 2 rally is a sell. This was our plan, actually this 4-hour chart, okay. It was our plan the last week. We might play it inside this zone and then start neither push up towards 140, 141 and then drop down. Okay, so we did play inside, but we dropped lower. Now, According to current price action, I will not be surprised at all if we can get down to here. So if this cycle is what I see, starting from the beginning of the week, we should see dollar CAD dropping down fast to reach towards 134 zone. This is also a monster support area, so it goes really good technically, right? Now, that's a 61.8 expansion of this beautiful cycle. This cycle is around 2 weeks, so 14 candles. Now, this one currently is 6, so if we drop within few days to here, it goes perfectly fit, technically correct, until we start to create divergence, and we don't have one yet. Okay, just the beginning for continuing, it's not there yet. That's scenario number one. If we reach that and we start to get a bullish divergence here, that might be the great place to start to look for potential longs back to 140, 141. The second scenario is we still remain inside a range now. And this range could be neither triangle style, so something like that, okay, or it could start to be, as we already had one false break attempt on this one, on this top, we might try to get one fake here and then move inside, something like that. So that's the ways I would play it. Would I really try longs for new highs? Well, the answer would be no, as for now, because we don't have yet good bullish divergence on weekly combined with daily, or even daily combined with 4-hour chart. Simply no reason. Therefore, for me, there is a way for another bottom to be reached. New Zealandian dollar, that's another pair we've been talking about. Let's find our beauty. Here we go. 2 waves down and we are after buys. 2 waves down and we are after buys. So from my point of view, while this bottom holds, I would still be looking for buys. This one now sounds interesting, and basically if we can get break above it, maybe even get some kind of convergence here, then lower time frames retraces, and I would be looking for great buys. If we take a look on the 1-hour chart, that's where we could get some kind of convergence. Okay, if we get it, pulling back, and we can go and rally that. The risk would be versus the last bottom or the last trend line. The reward is going to be the double, something like 068, 070 zone, according to the longer term plan. Dollar yen was another pair we've been looking to trade. Let's quickly take a look here. Dollar yen. Okay, we are looking for 2 waves up and then go for a potential sell. Now we had one wave up, we do have double wave down here, and that's what we could get from here. As long as this bottom holds, I would be looking for long. The question is how. Drop down to 1-hour chart, that's where we probably can get, let's enlarge the zoom a bit, that's probably where we can get attempts for best risk reward. That's the last trend line we have right here. If we manage to get above it, get some kind of bullish convergence right here for a good momentuming, then we can go and look for pullbacks and try the longs for the second leg like this versus this bottom. That should be great plan. Now there is one more thing to pay attention to, and that's the fact that we do have a false break right now on the trend, and we have a divergence. That's normally a great sign already. I have only one problem with that, even on lower times we don't have any convergence yet. So does it really worth to try the longs already? Well, you can get much better risk reward, that's for sure. But does it really worth? If yes, I would try to do it this way. Get this triple cycle completed, get back to 50% of this cycle, if it does follow it. And if we get some bullish divergence here on this zone, 50%, then I would be looking for this divergence, bullish candle of course, and then looking to long. Now a risk reward could be like 20-30 pips here. Okay, that's a risk. Reward could be up to maybe even 300. So that's 1 to 10. Huge, amazing. Technically, it's lacking in missing yet the convergence, the real momentum. But with such risk reward, well, even if you risk 0.2% risk only, 0.2 from the balance, you can get up to 2% profits. Really serious stuff, right? So anyway, that's two ways, aggressive and conservative. We have to go here. Now, if it doesn't follow and just keep going, then we are giving up on this one currently, because that could be the scenario I was talking about on the big cycles. Okay, we could then take a look, get this cycle and this cycle both providing the 161.8 right here to below 109, and we have a new cycle developing here which could be providing its 61, believe it or not, oh come on, here on the same place. So that turned to be a monster, a magnet. Later or sooner we will be here. I kind of have a feeling we will get this, then we will get this, and from there we are going to get this. That's kind of a feeling and a view I have as for now. Will that follow? Time will tell. As for now, you have the long setups to follow. If we break the last bottom and don't provide any buy opportunity, we are going down to here. Enough ways to short, and then look for longs once again. That's my view for a dollar yen. Very interesting scenario for sure. Now another pair on the list we have is the Aussie versus the Kiwi. Okay, this one is a bit tricky to be honest, and that's what we've been looking for. Let's take a look where we have it. Okay, Aussie Kiwi. Okay, we spoke about the head and shoulders, the special head and shoulders. Remember, if you forgot, go back please to last week forecast and look at the explanation for these head and shoulders. It's really good. So that's what we've been looking for. Two waves down, one push, one more push up, and then drop downs, right? That was our idea here, and that's basically what we got. Okay, that's pretty much what we wanted. That's what we had. Two waves down, one more push up, and now we are mirroring this cycle. Now, taking a look on the 4-hour chart, we had this cycle up. Ideally, we have one more push down, one more. Okay, push down, something like that. Ideally to below this area of 107. There is a small gap we might even try to close. And then I would be looking for potential breakout of this trend line. That would be the risk, probably. Okay, of course, ideally we get some bullish divergence here as well on this drop, and that would be the risk. The reward, that should be it. And remember, 110, 113, maybe even more if this momentum takes place. From my point of view, we are about to experience a rallies. If we break below 107 straight without providing divergence, without providing bullish candle, any bullish reversal, then I will suspect that we might get going for one more push towards 105, 104 to complete this double cycle and this double cycle before the rallies. But it's yet early, so I would keep my mind in a bullish view. Next one on the list is Pound Canadian. Pound Canadian finally reached the 196 we've been talking about since long time ago with this double cycle. Said not once we are going to 196, and we did. Now we are pulling back, and we have kind of a triple cycle here, but this is double for sure. So we could get now into mirror. So what I would be looking to do basically, especially with expected some bullish pound expectations, we probably should get something like to Let's take a look where it takes us to. This is the high, above 198.50 approximately, right? This is correct? Yeah, it's correct. We should get here. It's going to be bend to bend. It is going to be double wave. From here, we will very likely start, it might be 199-ish, maybe slightly higher. We would very likely start to get kind of bearish divergence. From here, something like that, we are very likely going to have this. Probably back to this trend line or so, on this support. And this is exactly the time to look for shorts here, to this, and then look for longs. From my point of view, pound CAD now is expected to mirror the last cycle. Therefore, while this bottom holds, and this is kind of great pattern for reversal here, considering the RSI on its extreme, that could be an amazing buy opportunity to take us back to 202-ish. So if it does follow the plan, we have great opportunities for longs there. Keep an eye on this pair, really nice one. One more on the list which I have is going to be the pound versus the Australian. Now this pair is very, very, very tricky, okay? It's still dancing around this bottom. Technically, it could make the sudden reversal down to 210, maybe even 206, and then complete the triple cycle and huge rally for something like 2,000 pips, maybe even more. So I am looking for that, but will we really get it? Not sure at all. The pound Kiwi is now, after double false break, 1, 2 in a row, followed by bullish divergence on the moving average on RSI, really good, even the histogram here. So I would try longs versus this bottom. Since the risk is not small, we can drop down to lower time frame, look for convergences. Right now we had one, but now we are pulling it back. So what another possibility for us to do is to get that that's the double, get another double to here. From here look for correction to mirror this, and then look for buy opportunities here, trying to take us back towards the top of the big range, and that's around 23. So as long as this bottom holds, I would be trying that. If this bottom broke down, we are going towards 210, maybe even 206 zone before we will switch up again. So that's another great pair on the list, and I think it's worth to watch and trade it. Another pair is the Euro Yen. Euro Yen broke the 127. No bullish divergence taking place yet on the weekly chart. So that might be the beginning of the double wave correction. Therefore, there is a room for bears. And as long as this is the scenario, we don't have bullish divergences nowhere yet, I would be trying to catch the potential reversals for a sell. Ideal, and I repeat, ideal scenario is from here or slightly lower. We should get two waves rally towards 127, maybe even 128 zone, get some bearish divergence here, and then look for a monster sell. That's the last trend line, and that's basically what should lead us as a great following resistance. From there, I believe, after this small pullback, we are going back to below 120, probably 119, 118 zone. So for me, this is another great opportunity. Gold, and that's actually the last one as we have it here. Gold. Take a look. That was our plan here for gold. Okay, sorry. Go. Where is it? Here we go. Okay, that was our plan. Now take a look on the gold, how actually it worked. Okay, I put it here once again, and now I put it here. I put it here once again, and now I put it here. Okay, so basically we got this drop we wanted. We got the pullback we wanted. The question is it able to give us now the retrace we wanted to get. Okay, now we are in a great sell zone. We have this cycle completed. What we have two scenarios here. While this top holds, I am looking for two waves down, this and this. We have two scenarios to continue from here. One, we will get kind of fake breakdown, fake break up, and a drop. Okay, fake break down to here, fake break up to here, and a drop, followed by this divergence. Another scenario that we could get, which is still a possibility, of course, is we are going to get some kind of bearish convergence, which means boom, boom, to get some kind of momentum. We are looking for two waves up after that, probably back to the trend line, bearish divergence here, and another sell versus the last stop. We will be aiming at this scenario, okay, to get back to this place, which is around 1200, maybe slightly lower, and ideally to duplicate this cycle and this cycle to below here, 1180. If we do have it completed, this very likely will turn to be a monster buy zone for my trend line, but this is the idea here. Okay, so that's another pair another thing we have on the list to follow. Now take a look on the US oil. We will have a new contract coming, and US oil is getting tricky and tricky. On these tops we have convergence, these tops, but this top still holds, which makes it tricky. Now I do like this kind of engulfing, to be honest, I do, and I do love the fact it is trying to keep the break here. I do like it, but the thing is, we better play it safe. Oil might take another bottom, easy, but I do believe as long as last bottom holds, it will respect it, at least on the short mid-term. That's my view. Now, if we manage to get two waves here and respect it, and false break this bottom, maybe even this area around 29, okay, then I would be looking to long the break of this cycle, looking for this big two waves up. If it doesn't respect and keep dropping, then there is a chance we are going for one more bottom, which could be below 20. I have my doubts fundamentally at this stage, simply because, well, it sounds too many traders expect and talk about new bottoms. That's the feeling I start to have. There are too many countries that could be affected on a very bad side if the oil does this move. That's what makes me think we are not there yet. For long run, I believe we might get it there. I don't believe we are there yet. Plus, after this double cycle, we have one false break. We might have a second false break. We might just play in a range for a while around this same zone. So for me, while this bottom is respected, I would be looking for buy opportunities. Two ways down, I would be trying buys. The potential reward is bigger than try any shorts. That's of course only my view. And I would finish with the natural gas, which from my point of view is coming to a monster buy. And let's take a look. Here we go. Okay, I am talking about merge contract, but I believe we already have one new. Let's see. This is merge contract. No, we don't have any new one. At least I don't have it here. Natural gas is coming to the monster buy I was talking about. Not once, not twice, probably more. This is, let me take the real trend line, it would be easier. This is the spot we should start to pay attention to. Okay, this, and of course, this. we are very far, very close, excuse me, for a monster setup. Yeah, it could drop down to 130-ish, could be slightly higher, slightly lower, it's all acceptable. But this is the cycle we're experiencing right now on a weekly time frame. If we take a look here, this is what we have. That's rare opportunities. Okay, this is kind of a triangle here, and this is the last cycle. We are going to here. Once we complete this divergence, attack for a buys. The risk we are trading here versus the zero. Levels we didn't have for a long time. According to my understanding, okay, the middle zone versus the zero is around 7.5. That's where I believe natural gas is aiming. Could that take time? Yeah, that's pretty much the range. Okay, it could take some time, but that's huge risk reward. Trade versus the zero is easy because you know your risk versus the zero. Keep in mind the contract renews. Okay, not every broker renews it automatically, so you might be want to trade for a long-term contract. Okay, or if you don't have this abilities, of course, trade the buys but on lower time frame setup. So basically trying to enjoy and catch these kind of things. Okay, like double cycle to complete on 1 hour chart, try short-term buys. Drop again, try short-term buys. Every time on the same contract. This is the idea. And from my point of view, we are now approaching the monster buy zone. That would be all for this week, friends. Thank you very much for your time watching this video. I wish you a wonderful week, great trading, and thanks again. Yours, Vladimir. If you have any question or feedback, feel free to leave it on the comments and I will reply as soon as I can. If you like the video and you have people around you who you believe can have advantage of this video and benefit out of it, please feel free to share and to spread the word. I will feel honored to help as many traders as possible. I am doing that only for the trading community. So thank you once again. Yours for your success, Vladimir Ribakov. Bye for now.